HPE opened 30% higher this morning after the biggest earnings beat in company history. Revenue, $10.68 billion, up 40%. EPS of 79 cents versus 54 consensus. The stock quadrupled from its October low to $60 in pre-market. That was last night. The story today is what happens next. Dollar General reports at 9 a.m. Eastern. Palo Alto Networks and ULTA Beauty report after the close. Victoria's Secret also reports this morning. Discount retail, cybersecurity, premium beauty, mass apparel, four windows into the same economy at a moment when the S&P 500 is at 7,600, Brent crude is above $104, and the VIX is pricing zero concern. I am Daniel Reed. This is Market Lens. Dollar General reports in a couple of hours. Consensus expects EPS of $1.90 to $1.95 on revenue of roughly $10.8 to $10.9 billion. The stock is down 22% year-to-date at 15 times earnings. That discount reflects real risk. DG's core customer is the sub-$50,000 income household. Consumer sentiment hit a record low of 44.8 in May. Credit card delinquencies are at the highest since 2008. But the counter-argument is equally real. Last quarter, DG beat by 23%. Same-store sales grew 4.3%. They raised guidance. The trade-down effect is bringing higher-income shoppers into the store. DG has beaten estimates in 4 consecutive quarters by an average of 24%. The key question this morning is full-year guidance. Management guided fiscal 2026 EPS of 7.10 to 7.35. If they maintain or raise, the stock re-rates. If they cut, the $90 support level breaks. The CEO transition from Todd Vasos to J.J. Fleeman adds uncertainty. The options market is pricing a 7% move. That is binary. This is the single most important consumer data point this month outside of Friday's jobs report. Palo Alto Networks reports after the close. This is the most anticipated tech report of the week. Consensus expects EPS of roughly 80 cents on revenue of $2.94 billion, 28% year-over-year growth. The stock is up 56% year-to-date at 162 times earnings. 3 metrics decide whether the stock moves up or down by double digits. First, next-generation security, ARR. Q2 came in at $6.33 billion, up 33%. Q3 guidance is $7.94 to $7.96 billion, implying 56% growth. The high end of that range is the number to watch. Second, remaining performance obligations, expected around $17.9 billion, up roughly 33%. RPO is the backlog metric. Above $18 billion signals customers are committing to long-term platform deals, not buying point solutions. Third, the CyberArk acquisition. Palo Alto issued 112 million shares to fund the deal. If dilution stabilizes, EPS accelerates into fiscal 2027. Palo Alto has beaten EPS in 8 consecutive quarters. The options market is pricing a 9 to 11% implied move, roughly $22 billion in either direction. If NGS ARR beats, the cybersecurity supercycle thesis strengthens, and the read-through to Broadcom and CrowdStrike tomorrow is positive. ULTA Beauty also reports after the close. Consensus expects EPS of $6.92 on revenue of $3.12 billion, 9.4% year-over-year growth. ULTA is the premium end of the beauty trade. The bull case is category expansion. Fragrance and skincare outperforming, the AG1 partnership driving foot traffic. The bear case is discretionary spending pressure. Operating margins compressed to 14.1% last year. Beauty is the first category cut when the consumer pulls back. The key metric is comparable store sales. Consensus is around 3%. Above 4% confirms share gains. Below 2% says the premium beauty consumer is weakening. Victoria's Secret reports this morning alongside DG. The turnaround under CEO Hillary Super is real. Full-year comps up 5%, the stock up 154% over the past year. But Q1 is seasonally weak. Revenue expected at $1.34 billion, down 1.3% year-over-year. The full-year guidance is the swing factor. Maintain 5 to 6% growth and the stock holds. Pre-announced tariff headwinds and the recovery trade unwinds. Here is the framework for the week. HPE proved AI infrastructure is accelerating. 40% revenue growth, record margins, guidance raised. PANW tonight tests whether cybersecurity platformization is the next leg. If NGS ARR beats, the supercycle thesis strengthens into Wednesday's Broadcom and CrowdStrike reports. DG this morning tests whether the American consumer is resilient or cracking. A beat with maintained guidance says trade down is real. A miss says the sub-50,000 consumer is running out of runway. ULTA and VSCO complete the picture. Premium beauty versus mass apparel, discretionary bifurcation in real time. The macro context cannot be ignored. Brent crude at $104 and the 10-year at 4.47% are tightening financial conditions. Every earnings beat gets partially discounted by higher input costs and borrowing rates. Global manufacturing PMIs are improving. China at 51.8, UK at 53.9, which supports industrials but keeps upward pressure on yields. The S&P 500 is at 7,600 on a 10-week winning streak. The earnings engine is still firing. But Brent at 104 and the VIX at 16 are telling you the market is complacent on macro risk. The divergence between earnings momentum and tightening financial conditions is the widest it has been all year. One of those narratives breaks first. Today's reports from DG, PANW, ULTA, and VSCO tell us which direction. Keep your data sharp and your logic sharper. I am Daniel Reed. This has been Market Lens.